A chance for the housing supply to recover? Hey, this is Dave with the Bolduc Realty Group, powered by EXP. Welcome to my weekly real estate market update. Today is September 9th, and we're going to jump right into the key Connecticut market stats. So active on the market, 4237. We're up a little over 70 from last week, so that's nice. We're seeing some increase in the number of houses available for sale. 360 new listings over the last 24 hours. That's also a little bit stronger than what we're used to seeing in the high 280s, 290s. And we have about 3,900 closings from August. That's probably the final number now. It's up from 3,400 in July. Based on those August sales, we got about 1.1 months of inventory. So seeing that 1.1 months of inventory, we still have a very low inventory position. And what that's telling me is that there's still demand out there. As houses are coming on, they're selling. Some key dates here. It was a relatively quiet week. Initial jobless claims came in a little lower than expected. It's a sign of economic strength. You know, there's fewer initial jobless claims, means that more people are still working. That's great for the people that have the jobs, don't get me wrong. But the Fed and the market are still looking for the economy to weaken. A weak economy equals weaker demand equals less inflation. The next 2 weeks have some potential for fireworks. This coming week, CPI on Wednesday morning, PPI on Thursday morning. These are the last two inflation reports the Fed is going to see before they meet the following week on Tuesday and Wednesday, the 19th and 20th. The Fed and the market both seem to agree we need one more interest rate increase for the Fed funds rate. Most think that's going to happen in September. I'm not so sure. Depending on what this comes out in this CPI and PPI, it could be this month in September. And also, depending on what we see from data over the next month or so, we could see an additional rate hike added to the list. So instead of just one more, it could be two more. So the bottom line here, the economy continues to show resiliency. The job market is softening, but it's still stronger than expected, and consumer demand continues to be strong. Even demand for housing, especially in Connecticut, remains strong relative to the inventory position we have. The Fed, they cannot impact the supply side of the supply and demand equation. They can and do impact the demand side. One of the big tools that they use is interest rates. Higher interest rates make it more expensive to borrow money. That limits growth and spending for both companies and individuals. That limited growth and spending results in less demand for goods and services and eventually price reductions. You know, kind of the opposite of inflation. As I said before, the economy remains strong and demand remains strong, stronger than expected. So a resurgence, if we do see a resurgence in inflation, that's going to signal to the Fed that demand is stronger, continues to be stronger than it needs to be, and that their efforts have not been fully effective. Well, I don't have any kind of a crystal ball here. I do agree at least one more Fed rate hike, and that those rates, the Fed funds rate, is going to stay high for an extended period of time. It could be a year, it could be more. So looking at the primary mortgage market survey, mortgage rates are stuck in the low 7% range. I really missed the forecast for my forecast for 2023 for mortgage rates. Until the market sees inflation around that 2% Fed target for an extended period of time, not just once or twice, but for an extended period of time, we're going to see elevated mortgage rates. I've talked about that before. These high rates will continue to suppress demand for real estate. So even though demand is higher than what our supply is, it is definitely suppressed. While it's not desirable for buyers, that suppressed demand does help with allowing time for inventory to build back up. And right now, the biggest challenge in the real estate market and the primary reason prices continue to climb is the absolute lack of inventory. Well, I hope this is helpful. Questions and comments, feedback are always appreciated. Throw them down in the comments below. Like, subscribe, ring notification bell. Have a great weekend.